Hello everyone, welcome back to the channel for another segment of Viewer's Choice. It's a series we're doing where if you leave a comment in the description below, we make a video of the stock of your choice. We take a look at this at the stocks and provide you next level analysis. You're not going to find this perspective on YouTube. I keep it simple, straightforward, and I clearly define the strategy so you can educate yourself and improve the way you trade. Remember, this is not financial advice. This is for education and entertainment purposes. So let's jump into the chart, shall we? Let's dive deep into Restoration Hardware. Let's take a look at the levels and where we think it's going. H on the docket. Here you go, Restoration Hardware. Big caps, big money, big cap stock, definitely in the hundreds of dollars. And what I've noticed when stocks get into these, $500, $600, $700 range, 500 even, they just act in all the same. They all do the same thing. And I'm going to show you an example after we just take a look at what's happening here, right? So obviously on the long term, this looks good. It just looks like it's going to keep doing the same thing over and over again, just highlighting some specific areas here. So if we look at this pattern, the market is a fractal, so it likes to repeat itself over and over again, right? So the same thing has happened here for a period of time. And then, if we look down here, again, we have that same thing, just choppity chop, and then we break out. So it's a how many times has this happened in the past, right? So it's happened 3 times now. We gap up, we go sideways, break out of it, go sideways for a few months, break out of it, and now this is the longest building of energy since last year, or in over a year or two. Usually it's been trending, and so it's going to be interesting. We may see a larger breakout because it's been so much time, but only we'll only see we'll see that when it happens, right? Normally they call it the Christmas or the Santa Claus rally, the Christmas rally, where in November, December you have this huge run up. You can see the stock hit 1,000. Why not? It's been doubling almost every time that it breaks out. So why not hit 1,000 by year end? Not an unreasonable target, right? So let's leave that here for December. Well, let's see if we get there. So now though, what I'm seeing here is a good setup. I like seeing this because I think the bears are going to get trapped, and this is a good bull setup. So you have a gap up, and now you have a failure. And I talk about this, and I teach this in my gap trading series and short selling series, where the price fills the gap, right? And this is your entry. So if you were looking to get long and you wanted to know how to manage your risk, because maybe you don't want to keep it for too long or you don't want to risk too much, well, this would be 472. That would be my entry. If I was trading this is how I would approach it. My risk would be for 640. A close below 640 on a daily basis would 640 or 600, right? It can spike through here and come back up. It has done that in the past, I think, but you need to be aware of these fake outs. See, this is what I'm talking about. This might happen, and this is where this would be a prime setup if you have this same kind of violation of this, with a wick. So that's something that you may want to wait for. If you're risk oriented, you want to get in here. If you're conservative, you may want to wait for this type of scenario where you see a wick violate these lines, and then that's where you would get in intraday. You have to be watching it on a regular basis, to get in, to be that precise. But that would be a good setup for it to go higher. Absolutely, sucker some people in, wash out the weak hands, and then bear trap the shorts, which then have to cover, and that would give enough energy along with the buyers. The short covering and the buying will give enough energy to break out, and you could see it go up to roughly 1,000. How many? So from here is we'll call it 500 to 700. So $200 move. So a $200 move here would bring you to 900, 920 easily. So why not 1,000, a whole number? So that's just where we can see the stock going. Where do we get into trouble if we close below here? Right? If we start closing below here on a daily, weekly basis, then we're in trouble. So the 402 would be trouble. So we could see, if you're on a weekly chart, you see it a little differently. And you can argue that that's why I like to flip time frames. But you can see some kind of rising wedge. Like, I find that these type of patterns sometimes are bearish, and then you see, some follow through on the downside as well. And that might be the bear trap, that scenario where I'm talking about, right? We are coiling, and usually these coils tend to break out on the bearish side, and only to after, just fake people out before it continues higher. That's the setup that you need to look for. Hopefully you learned something here. We'll keep an eye on this. In a month's time, 2 months' time, we'll come back to these viewers' choice, see how we did with our analysis, see where the stock is. Let's try to learn something together. Hopefully you enjoyed this. I'll see you tomorrow.